One of the main reasons why I see Tesla stock going up 40 to 50% this year is because Tesla is more than just a car manufacturer. It just released a new beta version of its fully autonomous self-driving software, which replaces hundreds of thousands of lines of computer code with artificial intelligence neural networks. And this could finally pave the way for a widespread release, and it could transform the company's economics and potentially even generate more revenue than the actual car sales in the long run. And then there is the Optimus, Tesla's AI-powered humanoid robot. The company has revealed several impressive demonstrations of its capabilities, and Elon Musk says it could start shipping as soon as next year. Well, Elon Musk has always been overly optimistic, so even if it takes the next 3 years, if they could make major progress in this year, that could be great for the stock price. He believes that Optimus could eventually create more value than everything else at Tesla combined, likely because it will have such broad applications from manufacturing to serving as an everyday assistant. This is really true. If Tesla's humanoid robot, the Optimus, becomes a reality, it will easily surpass everything else of Tesla has combined. So this could alone be a market of say $400 billion. So that is why the future of Tesla is still so interesting, even though 2023 was not a great year for Tesla. And these are one of the few reasons why I'm very much optimistic when it comes to Tesla stock in the long run. But Tesla stock has had many fluctuations frequently. So if one such thing happens, something going Tesla's way, one thing, two things, and then three things, and suddenly momentum starts picking up, and you could see Tesla up 40% in no time. And finally, Tesla installed almost 15 gigawatt hours of battery storage during 2023, which is a 125% increase compared to 2022. The company is ramping up production at its 40 gigawatt hour facility in California, and Elon Musk expects growth in this segment to continue outpacing growth in vehicle sales. And more households and businesses are opting for battery storage, not only to store energy from green sources like solar, but also to increase their energy security, especially in places where extreme weather is on the rise. And now this is an article from Motley Fool, and this says, could Tesla rejoin the $1 trillion club this year? And based on Tesla's $3.12 adjusted earnings per share for 2023 and its stock price of $196, it trades at a PE ratio of 62.7. That makes Tesla stock almost 3 times more expensive than the benchmark S&P 500 index. But there is something Tesla can do which the S&P 500 index can never do, which is there's so many potential, like when it comes to this humanoid robot and fully self-driving automation software. If all of that becomes a reality, this 3 times valuation will be more than justified. The S&P 500 index itself trades at a PE of 21.5. Automakers Ford and GM trade at a PE ratio of just 7.1 and 4.9. They've been there for so many years that have too little to grow from here, but that's not the case with Tesla. So I think all of this is really justified for me personally, because I'm an overly optimistic person. And I really believe Tesla will hit a $1 trillion club this year or next year. I don't see Tesla not hitting a $1 trillion, Tesla not again becoming a $1 trillion company by the end of 2025. And if that happens, your investment would be a 50%. And speaking in terms of utter reality, if Tesla doesn't join the $1 trillion club soon enough in the next couple of years, Tesla could start to become irrelevant. But what excites me so much when it comes to Tesla's potential is what it can do, in terms of this humanoid robot. If all of this becomes a reality, it would be so much helpful. And even if investors value Tesla as a tech stock rather than an automaker, which is reasonable considering all of its business initiatives beyond car manufacturing, Tesla is still twice as expensive as it appears in the Nasdaq 100 Technology Index, which trades at a PE of 30.3%. That's what Motley Fool had to say. To be clear, Motley Fool, he is not suggesting Tesla stock is about to halve in value yet again. He thinks there are enough long-term catalysts on the horizon to keep the investors interested, especially if a new EV model spurs fresh demand from low-income consumers. However, there probably won't be enough growth drivers to push Tesla stock higher this year, is what Motley Fool has to say. Well, he seems to think that Tesla will not go as high as $1 trillion valuation this year, while I believe it can get really close to that. So let's see at the end of the year who's right. So Tesla's revenue for Q4 was $25.2 billion, and the cost of revenue was 20 billion, so the gross profit was 4.4 billion, and the operating income before income taxes was 2.2 billion. So the income before income taxes was 2.2 billion. That's the money Tesla made in Q4 of 2023, and they had an income tax benefit of 5.8 billion. That is one of the main factors why Tesla's net income in Q4 was $8 billion.